Morning, Sahil. Good morning, everyone. We're really glad to see people trickling in. Let's give it a few more minutes to have others join as well. Thank you. Great. Good morning, good afternoon, good evening to everyone joining us from different time zones. Welcome to the Gender and Climate Finance Collective's third webinar as part of the Strategy to Scale series. My name is Diana Almoro, and I'm the Asia Pacific lead for the Insurance and Risk Finance Facility at UNDP. And it's a real pleasure to welcome you to today's session on closing the protection gap, climate risk insurance and social protection for women. We're very glad to see such a strong interest in this topic, which is becoming increasingly urgent, and we're really glad to have this opportunity to convene everyone for sharing and learning from one another. Right, to formally open our session, it's my pleasure to invite Ms. Athena Denise Galao, Program Coordinator on Climate Change at UN Women, to give the opening remarks. Athena?
Thank you so much, Diana. And good morning and good afternoon. I'm not sure if there's anyone who's almost nearing their evening or late evening, but let me just start with a simple observation, just maybe to just get us ready for the whole session. I guess what we always want is what we always say when we start sessions under the GCFC is that we don't have a shortage of gender commitments in climate, but there is really a shortage of gender responsive financial systems because ultimately, for people working in the climate space, a lot of the climate outcomes are really shaped by financial decision: who gets funded, how risk is priced, and also how what means what it when we talk about what's considered investable. So today, a lot of those decisions are still largely gender blind, and that's why we, UN Women, together with UNEP and the UNDP, together with our partners under the Climate Finance Collective, come together to look at what are the concrete problems that we need to solve. So just to say, maybe Diana, if you can share a little bit the PowerPoint in your screen, or maybe you're sharing it already, and
Yeah.
okay, I'm probably missing it. Okay, so just to say that the GCFC is a regional advisory and peer learning platform that sits at the intersection of climate policy, financial systems, and also trying to solve real world problems. A lot of the conversations have really been abstract when it comes to climate, gender, and finance. So we're trying to figure out exactly what it means in the real world. What we know so far is that there's very strong language on gender in NAPs, in nationally determined contributions, in adaptation plans, in climate financing frameworks, but it doesn't really translate into investable pipelines or financial products or risk framework. So, and that's where GCFC comes in. So our focus is really looking into how climate finance is really governed, how we try to connect policy commitments with financial decision making, and also how we try to promote good practice. So this space, which all of you are part of, is a co-working space because we're trying to see how solutions actually evolve through time and how it can change and how it can how climate result into gender equality and look and sorry how climate finance can result to gender equality and show up in real world outcomes. So maybe just to frame the session. So this session is, as Diana mentioned, is the third session under the series. The first two sessions are really looking into policy. The first one is on the BLM Gender Action Plan. The second session is on SME. And now we look into the protection space, protection risk as the third session. So just to say that we have three key objectives for this session. The first is really looking into how these solutions work in practice. The second is how we ensure that they complement each other and not replace each other. And the last is really to look at how do we move pilots to scale. And at the same time, how do we make sure that protection gap works as a system and it's not isolated interventions. So just before we begin, maybe some quick housekeeping rules. Maybe going back, Diana, on the slide
Yep.
before that.
It's loading. Sorry, it's already on my screen, but it's not showing on everyone's screen. Maybe my internet is lagging. Mm, do you see it now?
No, not yet. But just, I mean,
Yep.
guys, you've all been in webinars before, so you know the drill. This session is gonna be recorded, and please do keep your mics muted when someone is talking. But please do engage throughout the session. The chat is always open for you. You can also raise your hand if you do want to make points, and we do want to co-create the session with you. So and that's gonna and it will also depend on your ability to collaborate with us and shape the session into what you want it also to work, how you want it to work for you. So just maybe Diana, if there are no more questions, maybe I can hand it over to you to maybe walk us through the session, and looking forward to the discussions. It's going to be exciting.
Thank you, Athena. And indeed, I'm also excited to hear from our panelists today. And hopefully, we're moving from what you mentioned, from the abstract to the concrete and the practical. And I don't know if my slides are moving now. I've gone back to the session overview. If you can just also allow me to complement and build on what Athena mentioned. We're all aware of the challenges that women are facing. So today's conversation really builds on the nuances of that, right? And one thing that we want to really highlight, as Athena mentioned, is there is no one approach that is better than another, but rather how can, as we mentioned, climate risk insurance and social protection really work together in a complementary way to strengthen resilience. Because insurance, when designed well, could help households manage financial shocks. They can extend the reach of protection systems, and they can also support faster recovery. But at the same time, I'm sure we're all aware that we need to be realistic about the challenges, which revolve around issues of affordability, trust, accessibility, and sustainable financing. And I'm personally, looking forward to hearing more about these kinds of issues from our panelists, right? And again, hopefully by the end of the session, we get a bit of understanding on how climate risk insurance and social protection can be combined within a broader system. And with that, let me now turn to our distinguished panelists who really will bring perspectives from community level implementation. We have perspectives from the insurance industry and also from development cooperation. Now, each of our panelists will briefly introduce their work, around 2 minutes each, And they will be focusing on the problem they are addressing, the model they are using, and also how this connects to broader protection system. And this will give us a quick sense of the different approaches and perspectives that we have on the panel today. Let me then start with, hopefully the slides are moving. Let me then start with Dr. Sahil Hebar, who is the Senior Coordinator at Self-Employed Women's Association in India, and he spearheads the Parametric Climate Insurance Initiative and Climate Welfare Facility at SEWA, that seeks to build climate resilience among informal sector workers and facilitate access to affordable finance. He is a physician with management education and 16 years of experience in healthcare management consulting and development sector. Sahil joined the SEWA in 2020 and leads the Health and Wellness Initiative and several climate initiatives. Over the past 6 years, he has designed, implemented, and monitored health programs that improve access to affordable healthcare for informal sector women workers. He's currently working on the intersection of climate, gender, and health, and leading programs that mitigate the impact of climate change excuse me, on livelihoods and health. Sahil is also the co-director of SIO Center for Promoting Health, a collaboration between SEWA and Ahmedabad University. Sorry, I'm recovering from the flu, so pardon my voice. And with that, I'll hand over to Dr. Sahil.
Namaste and greetings to everyone. So thank you so much, Diana, for that introduction. And we thank UNDP for extending an invite to SEWA for this webinar. It's a privilege to be here. So just to quickly give an overview of why SEWA started the parametric climate insurance program for the informal sector women workers in India. In 2022, there was a massive heat wave in several parts of the country. And a lot of our members who are the poorest of the poor, who are from the informal economy in India, we unionized 3.7 million of these members across 20 states in India. All these members faced a very difficult choice. They either had to continue working to earn an income, but face the health outcomes as a result of working in extreme heat, or they could choose to sit at home but lose the income for the day. And because most of our members have hand-to-mouth existence, that means no food on the plate for themselves, for their children, for their families. And hence, a lot of our members continue to work through the heat, severe heat in 2022, and suffered from severe health outcomes as a result. So in 2023, we started the parametric climate insurance program as a pilot in 5 districts of India, and we covered 21,000 members. The product itself did not trigger in 2023, but a lot of our members really appreciated the additional protection that insurance provided. They knew that if the temperature crossed a certain threshold, then there would be some income that they receive to replace the lost income due to these extreme climate events. And one of the other things that we had done in 2023 is, along with the heat insurance coverage, we had provided each of these 21,000 members one climate adaptation device. It could be either a tarpaulin sheet, a solar light, a water cooler, or a large overhead umbrella. So these climate adaptation devices actually help them not only to bear the extreme heat, but also protected them from some of the other climate perils like unseasonal rains, excessive rainfalls, and tropical cyclones. In 2024, therefore, we scaled the program further. We scaled it up to 22 districts in India and covered 50,000 members. And this was in partnership with Swiss Re and Climate Resilience for All. And this year, in 2024, the product did pay out, and a lot of our members received very critical support when they really needed it. And it ranged from anywhere between $10 to $20. And that money was used to procure groceries, medicines, buy books and school uniform for their children, pay for their utility bills. And some of our members even used the payout to pay the debt that they had accrued during the peak heat season. So the program itself was a huge success for the 50,000 members that had participated in 2024. So in 2025, we further scaled the program, again in partnership with Swiss Re and Climate Resilience for All. And we covered 225,000 members across 35 districts in India. And this time we covered multiple perils. We not only covered excessive heat, but we also had a cyclone cover, and we also provided an excessive rainfall cover. And in each of this, the parameters are decided beforehand. Our members are like educated on the parameters, on how climate insurance works, when they would receive a benefit, what are the data sources, and so on. We have our dedicated team of grassroots leaders who go door to door and create awareness on the parametric insurance product. And along with the insurance product themselves, just in the initial couple of years, we also supported members through a cash assistance, a one-time cash assistance of $5 when the temperature crossed a certain threshold. And these thresholds for the cash assistance were at much lower temperature triggers than what we had for the parametric insurance cover. This is to ensure that members who suffer from the heat impacts, even at lower temperatures, that might not necessarily trigger an insurance policy. When they do suffer from those harmful effects of the heat, either on their livelihoods or on their health, they are provided some cash assistance that covers for those kinds of routine events. So that's how we have structured the entire program over the last 3 years. Our goal is to eventually scale this up to all 3.7 million SEVA members and ensure that all of them fall under the social protection scheme, and all of them have access to climate finance, affordable climate finance, when they really do need it. So I'll stop here. Thank you.
Thank you so much, Sahil. Such impressive work. And I think what comes through from what you just presented on your work is, the importance of grounding the solutions in sort of like the lived realities of the women, right? And also, I think the fact that there's the complementation of the payout and the cash assistance really reflects that SEWA is responding to the actual needs of the women. Thank you. And I'm sure that the audience will have more questions for you later. But for now, building on that, let me turn to the industry perspective with Dr. Michael Waltz. He is the technical sales lead for public sector solutions at Swiss Re, based in Singapore, an atmospheric scientist by training. He brings more than 8 years' experience across natural catastrophe modeling, actuarial analysis, agriculture reinsurance pricing, and parametric structuring. In his current role, he supports public sector clients worldwide with innovative risk transfer solutions, notably parametric solutions. Earlier in his career, he developed and calibrated Swiss Re's in-house NatCat models, such as the European windstorm, pluvial flood, and North Atlantic hurricane, and he holds a PhD from University of Birmingham and an MSc in meteorology. Over to you, Michael.
Thank you, Diana, for the introduction. So I'm briefly going to introduce the team that I'm working for. So as Diana already mentioned, I'm working at the global reinsurance company Swiss Re. So for those of you who have not a clear idea what reinsurance is, that's basically in the easiest terminology, an insurance company for an insurance company, which is sort of the main business of Swiss Re. But I personally work in the public sector solutions team. So we work on the reinsurance side, but also on the direct insurance side. Hence, this is a bit of a, let's say, a dual role that I'm in. And as you can tell by the team name, we are a team that's dedicated to the public sector clients. And what we define as public sector at Swiss Re is basically, it could be nationals, could be subnationals, could be government agencies, but it can also be NGOs, like the one that Dr. Sahil just presented, DEWA, or any other of those. So we've also worked with the World Food Program, UNDP. So there's a wide range in client segments that we define as public sector. And then since 2011, we've bound more than 1,800 transactions. And by transaction, that's in 90% of the time, that's risk transfer products or insurance products. And of those, a lot of them are parametric, which I guess we will go into a bit more detail in a bit later. But I guess most of you would have heard about parametric insurance, that use predefined triggers and then to basically trigger a payout in case of a severe event. And we have a global team that's spread from the US over Europe to Singapore, and then even Sydney. So we have around 35 people globally, all specialized in the public sector business, because it is quite different to, let's say, the commercial business that Swiss Re does usually, because a lot of the projects take a bit longer. There's a lot more capacity building needed. But we're really trying to sort of like advocate our perspective in a sense that like it makes sense to get the risk transfer ready before an event happens, right? So it's something you turn your, let's say, climatic or any type of tail risk, as we would say, to a prearranged finance product. So you don't have to like collect funds after big events happen, but everything is already prearranged. So right, there's a lot of studies that show. So I don't have the exact number in my head at the moment, but I think it's like something like if you spend $1 before an event happens, it saves you basically, or it's worth 7 times more afterwards, rather than you collect all the funding afterwards. So I think I'll stop here. We'll probably go into a bit more detail afterwards and give it back to Diana. Thank you.
Thank you. Thank you, Michael. Yeah, and I guess that would be a really good highlight and takeaway for today. If we invest, what was it, $1, we actually save $7 on
Yeah,
future
don't pin
damages.
me down on the numbers. I think that there's studies, but it's a good margin at least. Yeah.
Mm. Um, right. So let me now bring in a perspective from our national markets and implementers. We have Ms. Trantan Tao. Hold on. Okay. Um, she is the director of the bank assurance division at Bao Viet Insurance, one of Vietnam's leading insurers. She leads the development of innovative insurance distribution models through partnerships with banks, social organizations, and community networks to expand insurance access for underserved populations. She currently heads Bao Viet's women-centered micro-insurance initiative in collaboration with the Vietnam Women's Union. The initiative received the Innovation Challenge for Inclusive Insurance Award, which was supported by UNDP in December 2024, and her work focuses now on strengthening financial protection and climate resilience for vulnerable communities, particularly women in rural areas. Over to you, Ms. Tao.
Um, Good afternoon, everyone, and thank you for Diana's introduction. So, well, I work for Bao Viet in Vietnam. It's a leading insurance company in Vietnam, and we work in both life and non-life insurance. And we also a partner of Swiss Re. Swiss Re is a very important reinsurance partner. So, in the long run, we really hope that once we are successful with the model that I will be introducing, so we have the chance to work with Michael's team to introduce parametric insurance into Vietnam market. So the key challenge in Vietnam market is the low penetration rate of insurance for commercial insurance, even though that we have a quite high penetration rate of more than 90% of compulsory basic health care. But as per the how to say the concept of the idea of the government, we want to increase, we want to supplement the compulsory insurance by an affordable commercial insurance. So the challenge is how and why commercial insurance can be introduced to the remote areas, to the how say small cities. So that's the challenge, and especially for the women, because in the remote areas of Vietnam, women is the key person that will hold all the wealthiness and the health of the family. So the challenge is there. And we try to solve the challenge by working with the Vietnam Women's Union. It is the sole social political organizations in Vietnam that have the grassroots national network. And we have a pilot model back to 20 years ago in one province, very successful model to work with the Vietnamese Women Union. And we want to also leverage the pilot model back to 20 years ago together with the half of UNDP to scale it to national network. So we succeeded in signing the cooperation agreement with the Vietnamese Women Union late 2025. And we hope that we can scale up the microinsurance, first basically based on the personal accident and small healthcare insurance to supplement the compulsory government insurance. And we want to increase the penetration rate of commercial insurance to like 10%. Now we have less than 2.5% of commercial insurance individually in Vietnam. And working with the Vietnamese Women Union, we find that it is not only the distribution channel, but it's like the only bridge to have, overcome the gap of how to overreach the underserved populations in the remote areas. Yeah, thank you.
Thank you, Miss Tao. And that's a very helpful perspective on how, as you mentioned, the commercial insurance industry is really realizing the viability of the underserved segment, including women in rural areas. Thank you for that, and we're looking forward to hearing more about Balviet's experience. Now, last but of course not the least, let's hear from a regional program that has been working across multiple countries. We now turn to Ms. Akata Taito, who is the Climate and Disaster Insurance Specialist for the Pacific Insurance and Climate Adaptation Program, or PCAP, a joint program of the United Nations Capital Development Fund, UNDP, and the United Nations University Institute for Environment and Human Security. Akata has more than a decade of central banking experience in the financial system development and financial inclusion. During her time with the Reserve Bank of Fiji, she led the Financial Inclusion Data Working Group of the Global Alliance for Financial Inclusion as chairperson in 2021 and 2022, represented by 62 member countries. In her current role, she has worked with UNDRR and Fiji insurers to test the novel anticipatory insurance scheme for cyclonic event with local communities, and she is leading the work on climate and disaster risk insurance in the Pacific. She's also authored several knowledge products on green finance and journal publications and articles on financial development, demand studies, and climate and disaster risk financing articles across the Pacific. Over to you, Akata.
Thank you, everyone. In Fiji, we say bula to any time of the day when we're greeting someone. So I will say a big bula to everybody. As Diana had mentioned, we are a joint program implemented by 3 UN agencies. We are a regional program. And really, our work in the Pacific is acknowledging the development challenge for Pacific Islanders, where we are highly exposed to climate events, and not only seeing the intensity of these events, but the frequency of natural hazards. And against this backdrop, we were well aware that when we look at private sector, there were not, I would say, lack of solutions available, particularly to the vulnerable groups where they can tap into to build their resilience. And so the overall objective of our program is really to improve the financial preparedness and resilience of Pacific Islanders towards climate and natural hazards. And we do this specifically through our insurance response mechanism. I don't know if you can see the slides, particularly for our program, because mine is still showing Vietnam.
Yes, I'm so sorry. It's also showing Vietnam on my screen, but I have it on my window. But yes, please continue. I'll try to
that's
figure
okay.
this out.
I can continue.
Sorry.
Yeah. So we do this through specifically through an insurance response mechanism, and our target groups are really low-income households, communities, MSMEs, cooperatives, and farmer associations. And we work closely with, we co-design the solution with numerous local stakeholders, and where gaps exist, we link them up with international partners, particularly with reinsurers and risk modelers, understanding the lack in capacity that exists in the local institutions. We are currently present in 8 Pacific countries, namely Fiji, Tonga, Samoa, Solomon Islands, Vanuatu, Papua New Guinea, Kiribati, and Tuvalu. And most of the solutions that we implement in each of these countries are really tailored to their country needs and depending on the risk profile of each of the countries. So since 2021, when we first launched parametric insurance in Fiji, to date, we have seen around over 60,000 people actually taking up parametric insurance. There have been triggers across 4 of those countries in Fiji, Vanuatu, Solomon Islands, and Papua New Guinea. Different triggers. In Fiji, it's rainfall, excess rainfall. In Papua New Guinea, it's earthquake, and so on. So these solutions that we co-design with local stakeholders is really to ensure that there are investments from insurance companies, but also buy-in from government and other local players. So I will stop here and look forward to the deep dive that we will have throughout the session.
Thank you so much, Akata. Can you hear me well? Sorry, I've just run into a bit of like technical issues, but hopefully everyone can hear me well. Thank you for that, and really great highlight on the importance also of all these collaborations and the fact that different stakeholders need to be involved. So I hope you'll agree with me that what we've heard really are different entry points into the same challenge, from community level engagement to product design, market delivery, and also regional program support. Let me now move us into that discussion where hopefully we can also connect some of these perspectives more directly. If I can start with Dr. Sahil, SEWA has been working with women since 1972, I believe, and it currently represents almost 4 million Indian women across 20 states. Really impressive. From your experience, what makes insurance truly accessible and trusted, and what have you seen as the biggest barriers to uptake?
So I think in our experience, there are 2 things that need to be done for insurance to be really accessible and trusted. One is the insurance design itself needs to incorporate feedback from the women whom we seek to protect. So even during the course of these 3 years, it's never been the first product that was designed that was accepted. It's a very iterative process. There's a lot of back and forth. The triggers are changed, the premium is changed, the payouts are changed. So there are several things that are informed by the inputs of the members. And I think that is a critical component that does generate ownership and buying from the community. The second aspect is having a really dedicated and strong cadre of grassroots leaders who know the community members and have worked in these communities for years. So in case of Seva, we have our own cadre that goes door to door, that organizes small team meetings. And it's the trust that the community members have in these grassroots leaders that actually makes insurance accessible. If today we survey all the SEWA members and ask them if they know the intricacies of the insurance policy that's been designed for them over the last 3 years, my guess is a large number of them don't know the nuances or the details. The only reason that they are buying in the program is because they trust the grassroots leader who's approaching them. So I think having this network of grassroots leaders as well as ensuring that members have a voice in the design itself is critical. In terms of the challenges that we have faced, I think the biggest challenge is the low climate literacy among the informal sector workers. I think in most poor and vulnerable communities, the concept of insurance itself is relatively foreign, and nobody's heard of climate insurance or parametric climate insurance. Some of them might have opted for health insurance, for motor insurance, or for life insurance, but the concept of climate insurance is relatively new, and hence there needs to be a lot of emphasis and support provided for climate literacy, so that members understand what climate change is, what are the factors contributing to climate change, how does that impact the various aspects or facets of their life, and how does insurance and other protection mechanisms provide a safety net. I think till that climate literacy is improved, it's very difficult to have large scale demand generation. The second critical challenge that we have faced is demand generation year in, year out. So in our experience so far, the product has worked really well for members in 2024, but not so well in 2023 and 2025 in terms of the payouts. And when a poor person is contributing almost $4 towards the premium of the product and they don't receive a payout, it does lead them to question the value of the money that they are contributing. Now, we all know that insurance as a concept is there to cover catastrophic events. But I think from a community perspective, there still needs to be some time given for them to understand this concept. Until that time, we always run the risk of poor demand generation in years where there are no payouts. So I think that needs to be something that we work on. And that's where the cash assistance that we have provided in 2024 and 25, the climate adaptation support that we provided in 23 is critical. At least for the first 5 to 7 years, when there is concurrent climate literacy being built, we need to think about how the community can be better supported through one or more of these other measures. And then the final key lesson learned is the financial sustainability. So long-term financial. So in our program, the members contribute part of the funding, and then the rest is funded through a grant that we received from Climate Resilience for All. If there is no funding support initially, and if the premiums are not subsidized, I think the long-term financial sustainability is very tough to achieve. But if that is something that is given for the initial, say, 3 to 5 years, then members slowly realize the value of insurance, and over a period of time, the program can be financially sustainable without the need for grant support. So I think this model where there is some amount of subsidy for the initial few years is critical for long-term financial sustainability of the product. And finally, the role of IT. So I think the big challenge that we had in 2023 and 2024 is that we had a paper-based member enrollment system. And that resulted in a lot of manual data entry errors. And a lot of our members who should have received the payouts did not receive it because either the bank details were incorrect, or the name was incorrect, or the personal identifiers were incorrect. So in 2025, we introduced a mobile application that automated this process, and we have seen a drastic reduction in the claim reject rate. So I think that is critical, and also having some kind of technology for the cash transfer or the premium transfer. I think that is critical as well, because a lot of our members don't receive notifications when there is money deposited in their account from the insurance company. So what happens is they are unsure if they have received the payout. They need to go to the bank repeatedly to verify. And in a lot of instances, that takes multiple visits, multiple trips to the bank. There's a cost associated with each of these trips. They're not able to work for those hours. And hence, if there is some technology that can be introduced to ensure that this claims management piece is smooth, I think that will really ensure that insurance is accessible and beneficial.
Thank you so much, Dr. Sahil. You've just, given us such a mountain of information. We can talk about all these elements even for the whole webinar. But if I could just pick out what really stood out for me is, as you mentioned, right, it's not just about the accessibility or even the availability of the product to the customers. It's really making sure that they're actually responding to the needs and the risk profiles of the women, and also for the trust building, as you mentioned, the champions, the cadre of women is really instrumental to build that trust, and then that's supplemented also by the technology that helps with the demand generation. And I'll come back to you later on the premium subsidy and premium financing. I think that will be also a really interesting conversation point. If I could just move over now to Michael, building on that and also drawing on, Swiss Re's experience working across different markets. What conditions have you seen need to be in place, financially and institutionally for these models to scale sustainably?
Sure. So I can give you a bit of more the macro perspective in a sense, right? Because as Diana was mentioning, we've worked on different countries, different, let's say, scale of these products as well. But I think the first key takeaway, and Dr. Sahil also touched upon this, right? I mean, insurance should never be positioned as a replacement of social protection, right? Because insurance works for these extreme events. Insurance is not an instrument to cover, like, let's say, an annual loss that you would see, right? So this is the first thing that needs to be clear, that it's not a replacement, but let's say a complement to this entire process. So you would have some sort of a, let's say, a self-funded layer in a sense that could be from savings or just like some, as Sewa was doing, this self-funded layer. And then for these really extreme years that come on top of these, let's say, annual losses that you would expect anywhere, then this is what the insurance product is then for, right? Then secondly, of course, affordability support is essential, as in the case for Sewa, from CRA, but that can be also other public budgets. It can be blended finance. There could be premium support by other NGOs or like private donors as well. But generally, I mean, it depends a bit on the line of business in a sense, because I see for agriculture, for insurance, right? So even countries like the US, they still have subsidies to the premium of their nationwide or just the statewide agriculture programs, right? So I don't think we can expect some of those programs to run sustainably, like in the next 3 to 5 years, without any support, because even if those big, even if the big industry nations, right? I mean, they still rely on those subsidies as well, especially for something that's very climate related, like agriculture, where you see droughts in different parts of the country almost every other year. So I feel it's difficult, but I think like to run it completely sustainable by itself, I think there's still some way to go. But I mean, it's also, I mean, premium support and also these type of instruments work as well, right? Then thirdly, basically, the risk layering has to be clear. It links a bit to the first part, right? I mean, frequent, let's say, more low severity events that still might be, I mean, I'm not saying they're low severity, it might just be on a scale that don't affect maybe as many people or many women as like, for example, the 2024 year event affected. So that's why the layering has to be clear. Like if in coming back to a parametric insurance example, if you set the trigger too low, like for example, if you already attach it for a tropical storm policy, if you say you pay out for every tropical depression that, for example, across the Philippines, then there would be basically a few payouts every year, and this makes the insurance premium very high. So then your money is better spent on sort of a self-funded layer, as mentioned before. Of course, then the scale also depends a bit on the trust on the delivery channels. I think Dr. Sahil elaborated quite a lot on this. Like it has to be clear who actually gets the payout of the policy. Is it in a micro insurance world? Is it like the actual woman who gets the payout? The macro insurance world, it's more sort of like an aggregator, what we call, right? It's someone that actually has all the member information, and they can decide like which were affected the worst. But then all of these, I mean, there needs to be some coordination across the insurance company, the reinsurance company is then from ourselves, the regulators, and also the donors. So it has to be clear who has which role, until that the money actually makes it to the last mile, right? The last mile delivery is then quite important. And then maybe on the more technical side, I mean, of course, to come up with, especially the parametric insurance products, data is quite important. So you need a decent quality and resolution in a spatial and so temporal space of data. That could be temperature time series that we, in the SEWA example, worked with like some international data sets, but then the client request was more to move towards the local IMD, the Indian Meteorological Service data. So there is different types of products you can build. The only thing is that everyone has to agree on that the data works for them, right? So the insurance company has to say that works for them. So the local policyholders have to say, okay, this data, I have access to the data. It needs to be transparent for everyone. So this is something that's also quite important. And of course, then there needs to be, at the end of the day, the value of the product, which in a parametric world is usually the fast payout. It's usually sold in sort of an anticipation between, let's say, like 20 to 30 to 40 days. I mean, that's the ideal case. Depending on the data availability, sometimes can take a bit longer. It can also be a bit quicker. It depends a bit on also the distribution. And I mean, to conclude a bit, I mean, there's a few points I think that are worth mentioning or to remember also. I mean, it's the affordability. So meaning insurance is not there to cover every year's losses. It's really more for the extreme events that otherwise you would have not have the funds for. I mean, at the end of the day, it covers your, let's say, financial volatility. Then the risk layering, which is linked to that. So you basically have to build a product that attaches at the right value for it to work, also to be affordable. Then the trust aspect, and then the coordination between the public and the private sector as well on like who pays whom and who pays out then to whom and all these sort of, let's say, more admin tasks that also need to be predefined.
Thank you, Michael. And what I'm hearing is that whether the insurance solution, climate risk insurance solution, is for the sovereign, the government, or whether it's for the women at the micro level, there are common factors that need to be considered for scaling and sustainability, right? As you mentioned, also Dr. Sail mentioned this, trust building, the coordination, but also I think really understanding what insurance is for, right? And also how that fits into whether it's the government or a woman's portfolio of risk management instruments. Thank you for that. Now, if I can move to Akata, so one of the strengths of PCAP seems to be, and we saw this on your slide, it's the ecosystem approach, working with regulators, with the insurers, meteorological services, and communities. So could you just share with us what has been the most important in initiating and also in sustaining this collaboration, and where have you faced the biggest institutional challenges?
Yeah, thanks, Diana. So I think we very early in our program, we acknowledged we established the development challenge in the Pacific. And when we initiated discussions with insurers, what we find is that they were not quite keen to expand their product offering when we talk about climate and disaster risk, because to them, understandably, it's a very risky portfolio, and we're talking about small Pacific markets, which perhaps do not quite make sense to them unless there's some kind of injections provided. And so as a program and understanding the gap right from the start, we realized that no one institution can do this alone, and that we have to bring in different partners into an ecosystem that can look at this holistically from the supply side all the way through to regulators, government agencies, but also from the demand side. So over the last 5 years, what we have done as a program is to establish an ecosystem of partners, mainly with local stakeholders, not only to co-design solutions, but also to implement parametric insurance, to be specific. This, to us, essentially means de-risking insurance companies to seriously look at parametric insurance product offering, and then linking them to global risk modelers, understanding the limited capacity that exists, and where the existing reinsurance arrangements fall short, we then link them up to global reinsurers who are able to look into the Pacific market and provide some sort of support. Then we also have to think of the overall licensing arrangements of insurers, where every product has to be approved by the regulator, and working with the regulators to ensure that the enabling environment supports these new and innovative solutions that are coming into the market. So I think for us, we were quite fortunate that we were able to test the parametric insurance solution, firstly in Fiji, with the Reserve Bank of Fiji, where we went through the regulatory sandbox. We were, in fact, the first product or solution to enter the regulatory sandbox and the first to exit successfully. And then from the regulatory side, we have to also think about how can we reach the last mile. So working with mobile network operators, where from the demand side, individuals or households can pay for their premiums with very little movement or cost implications. And then leveraging existing stakeholders that already have built trust within communities. I think Dr. Sahil also talked about this. If it's working well, why reinvent the wheel, right? So working with existing community stakeholders that can already have a large member base to not only use them as advocacy agencies, but also support with the onboarding of members who are interested to take up parametric insurance. So for us, perhaps what that really worked well in terms of looking at the whole implementation of parametric insurance from a holistic perspective, from the supply side, regulators, all the way through to the demand side. But also, most importantly, as well, is being able to align our work with national strategies and policies for scalability and long term sustainability. And in terms of the challenges, I would say one of the biggest friction points for us would be capacity constraints. When we're working with different partners, we're not only talking about capacity constraints from insurers, but also from the aggregator partners, from mobile money operators. How can we, spin this as a potential use case and increasing uptake of mobile wallets for them? So having to build the capacity of all these different stakeholders and tailoring those capacity needs so that we can sustainably implement parametric insurance. Then we come to the end users where already the uptake of insurance is low in the Pacific, very low. And most of the time, the uptake of insurance is really because it is a requirement from financiers when people are taking out loans. So to talk about parametric insurance, which is a new product in the market based on predefined triggers, we may think that it's simple and easy to understand, but as we go down to grassroots, to our vulnerable communities, it becomes a real challenge. So having to work with existing partners in the communities where they trust is also a key element to us. But also, I think one of the speakers mentioned the retention rate, especially when there are no triggering events. So how do you continue to keep people interested in taking up parametric insurance and seriously look at this as a risk mitigation tool rather than always considering whatever I pay as sort of an investment, because that is the reality. When we started awareness in communities, people think of this really as an investment. So if I'm paying premium and there's no triggering event and I'm not receiving a payout, is it a scam? What does that mean for the money that I had invested? And we're talking about vulnerable communities. So having to instill parametric insurance knowledge across these communities is also a challenge for us, but we find that it has to be an ongoing exercise year on year. We're already on the fifth year of implementation, and we find that we have to go back to communities, continue to raise awareness around what parametric insurance really is about. But then we also come to establish the proof of concept. And when we're talking about a new product, the importance of premium subsidies and how can we ensure that whilst we start off with premium subsidies, this is not seen as a norm and that it has to have a phased out approach. So that is a challenge that we're kind of trying to figure out now. And I think we have a solution, which I can talk about it more on, but phasing out the premium subsidy is a key to us in terms of ensuring that they are not fully reliant on premium subsidy. Otherwise, we risk distorting the market and the commercial viability of this kind of new initiatives that we're bringing in.
Thank you so much, Akata. And again, that's a laundry list of challenges that I guess every one of us, through partnerships, as you mentioned, continue to address. And I really like how you emphasize the key role of regulators, because in some markets, they might be seen as sort of like imposing their regulatory and supervisory rules, but actually in other markets, what we're seeing, as you mentioned, they are actually enabling innovation. So thank you for that. And also you mentioned, there's really a need to demystify and really make clients understand what insurance covers. It's not an investment that you get an ROI on, which is a good segue to Miss Tao, because from Bao Viet's experience, reaching diverse customer segments in Vietnam, I know that Bao Viet has also invested quite a lot in financial literacy. What has been the most effective in reaching women who are traditionally excluded from the insurance markets, and what role do partnerships play?
Yeah, thanks for your questions, Diana. So in Vietnam, we don't face with, I would say, the obstacles in the banking system like in somewhere as shared by Mr. Sahil. So in Vietnam, everybody can have access to bank accounts very easily, irrespective of where you are. So the most effective, but nevertheless, it is still very difficult to reach out the women in the remote areas to provide insurance. And we believe that the most effective way is the three things. The first thing is we should have the right the appropriate distribution channel that can reach out to their populations. The product is we have a wide selection of products, but if we don't find the right distribution channel, then we cannot understand the needs of that target market, and we cannot tailor make. We can build a product to the specific needs. So the first thing is the distribution channel. We believe that that's the key. And then once we have the distribution channel, we will build a very simple and affordable product tailor-made to the needs of the target market. And the final thing, we believe that, as Akata has mentioned before, raising awareness and ongoing education, ongoing workshop to increase the awareness about insurance is the key, because we are talking about microinsurance. We're talking about people lack of the knowledge about the finance and insurance, and anything that is too complicated to them, they will say no. So just make it simple and make them, how to say, ongoing, be updated, aware of their needs for insurance. So that's my sharing. Back to you, Diana.
Thank you, Ms. Tao. And I take note, as you mentioned, really key are distribution channels, tailored solutions, and also making them simple, but also raising awareness. And it's really good to hear from, a commercial insurance company, the willingness and the importance of distribution channels, which also echoes what Dr. Sahil mentioned, right? Many times, some insurance companies don't actually have the outreach or the capacity to reach women in the rural areas. So these kinds of partnerships with distribution channels are key. Um, if the panelists would allow, because I see that we've received a number of questions in the Q&A chat, so I will pause my questions for now, and maybe I'll pick on maybe there's I think we can club them into two, and I believe the two latter ones I can initially address to Dr. Sahil. So one of the questions from Mr. Abdul Rahman, he's asking, how can grassroots organizations like FSHBW access climate risk insurance programs for informal women workers? Are there any pilot projects or funding opportunities? How can home-based workers be included in national social protection systems? I think it's a long list of questions. What role can local federations play in designing and implementing climate insurance schemes? And yes, is there technical support available to help organizations like FSHBW to build their capacity in climate finance? And the other question for you, Dr. Sahil, is as you have said that there's a low literacy rate among informal sectors about such things, but why don't you have taken state government assistance to promote the propaganda in order to achieve the idea of SEVA? That I know that's a lot of questions, but I'll leave it to you to pick out the key points, and then maybe at a separate time we can send your responses to both respondents. Over to you, Dr. Sahel.
Yeah, so Dan, I'm not sure I captured all the questions. I'll try to answer it the best I can. I think the latter question on how the state governments can play a role. I think right now in India, at least, sovereign climate insurance is not yet there, either at a state level or at a national level. The only exception to this is excessive rainfall / flood insurance that one of the states in India has implemented for all the citizens living in that state. Otherwise, the concept of climate insurance has still not penetrated within the government infrastructure. I think there's a lot of interest because there are enough proofs of concept to show that insurance can play a vital role in social protection. So I think the governments are listening, they are exploring ideas. But as of now, the rollout has not happened in any other state except one state in Northeast India. And therefore, taking their support becomes a little difficult. A lot of times we work very closely with them. We continuously share our lessons learned, our ideas with them. But I think maybe over the next 3 to 5 years, once there's a shift even within the government and there's more demand for these schemes, I think we can play a very close role with the government to promote climate insurance and ensure that all sections of society get access to insurance. The other questions on the funding opportunities and how we could go about it, I think any program needs to start with some member contribution. Uh, it would be very difficult to have the premium 100% subsidized because all funders expect us to have a roadmap to financial sustainability. Um, but also more importantly, we don't want the community to get used to the idea of having access to insurance for free. So in at least the Seva membership, their contribution is around $4, and then the remaining $4 to $5 is grant funded. And every year we want to ensure that the members' contribution of this premium keeps increasing so that over a period of 5 to 7 years, the entire premium is being funded by member contributions rather than through a grant. Um, Now, there are ways to do this. We could have certain member groups who are more vulnerable contribute a little more. What we have done is that for members in one particular state in India who are exposed to excessive rainfall risk, cyclone risk, and to heat risk, they are paying a much higher premium than members who opt for just heat insurance. So I think there is some amount of segregation, risk profiling that can be done to ensure that the distribution is a little more fair. And finally, like I think even in our program, we do include home-based workers. Now, there are different funding organizations out there. We were supported from CRA, but there are others who are increasingly learning about parametric climate insurance and are willing to fund. So there's a whole list of like philanthropies, donors who are interested in this concept. And increasingly, we are seeing that corporates are also entering this space. So we are being funded by 2 or 3 corporates to take the idea of insurance forward. So there's a realization that climate insurance aid disrupts the supply chain, and hence corporates are increasingly at risk and would like to cover for the insurance so that their supply chains do not get impacted much. So we can have a separate conversation regarding this, but there are avenues to raise funds for these programs.
Thank you, Dr. Sahil. And I agree with your point that, we shouldn't be encouraging this over dependence on, aid and subsidies, that what we're trying to do is really integrate it and institutionalize it so that it's in the mix of instruments for long term. Thank you for that. I'll
Uh,
pick up one question. Sorry, go ahead. Did you want to add
Sorry,
something?
Diana, just one other
Yeah.
question on the pathways to integrate social protection schemes for the urban poor. So we have been talking to the Indian government on some of the schemes. There's a PM Swanidhi program, which is for street vendors. And the idea behind the program is that street vendors have access to a loan of 10,000 Indian rupees for climate events. Now, if we are able to integrate climate insurance as part of this, where the members who opt for the PM Swanidhi Yojana get 9,500 Indian rupees, and the remaining 500 is used for premium to purchase climate insurance, then that would ensure that these insurance programs scale up relatively quickly. Similarly, there are other schemes that the government of India has organized or designed where there is a scope to integrate insurance seamlessly. So I think these are continuous conversations that we are having with governments that I'm sure other civil society organizations are having. And there's more awareness regarding these. Now, hopefully the government over the next few years designs a scheme that is comprehensive, that provides both grants and insurance as part of the social protection mechanism.
Thank you for that. And there's another question from Miss Joyce Lane. I mean, she didn't address it to any particular panelist, but I'm inclined to direct this to Michael. So she's asking, curious if any speakers have seen successful cases of translating strengthened community or environmental resilience outcome to insurance premium reductions over time. If not, what are the barriers to doing so? I think this question is really relevant because now we're also hearing this narrative of how, risk reduction incentivizes more affordable premiums. But Michael, any thoughts on this from Swiss Re's experience?
Sorry. So I think in terms of, let's say, risk reduction measures, I mean, it depends a bit on the peril, I think. I mean, for heat, for sure, it's a bit more difficult than, let's say, for, let's say, a tropical storm or maybe a flood, where you can build some sort of, like, let's say, disaster like protection measures. I mean, that's also, I think, another point that's valid though in that context, and I think like with the reducing the premium or also maybe the risk overall from a, let's say, insurance perspective, is a diversification angle, right? So basically, the bigger the region is you're covering with a certain program, the easier it is also for like an insurance company to take on the risk, because they know, okay, there might be maybe some payouts in the, take the example of India, right? There might be a payout in the east of India, maybe there's one in the west of India in the next year, right? So you basically balance your risk profile a bit better. Whereas if it's very concentrated, that you only build a parametric product for one particular city or something like this, and then it's either there's a lot of years where there's no payout, but then there's one year where there's all the payout. So I think, I mean, for sure you can, I mean, in the underwriting process, some risk, let's say, mitigation measures are being taken into account already. As I said, it's a bit dependent on the peril. If it's flood, earthquake, wind, heat, of course, will be a bit different. I mean, in the agriculture space, there's quite a lot of discussions on this climate smart agriculture as well. Like if there's anything that the farmers can do, also if they understand a bit better what kind of risk they're facing. But I think this, let's say, diversification aspect, which also moves or is trying to move a bit the pilot then into the scale, I think that's really important, right? Because at the end of the day, the insurance principle is basically always a lot pay for a few, right? So you have a lot of people that pay a premium, and then ideally only a few actually need it. So this is the whole concept, and of course, if you, let's say, increase the basis of people that pay a premium, and then also the rates can go down, right? Because the overall risk is diversified more. So that's how it works a lot in European public risk pools. For example, in Switzerland, there is a pool for homeowners, for example, or in Turkey, there's a earthquake pool. There's a pool also in Morocco for earthquake. So there are examples. I mean, they're a bit more on the state level, of course, not so much on the micro level. But generally, the concept of diversification, I think, is important to keep in mind as well.
Thank you, Michael. So diversification is key, I guess, to incentivize hopefully affordable premiums. Um, uh, we're receiving really interesting questions. I hope the panelists don't mind that we'll park some of the assigned questions, but just going through another question from the audience, maybe I'll direct this to Ms. Tao. So, based on your experience in Vietnam, how was trust established between, I guess, Bao Viet, other insurance companies, and the women's union?
Oh, thank you for your questions. Actually, it's a long, long journey to build the trust, so that the Vietnamese Women Union agreed to sign the cooperation agreement with Bao Viet. So in Vietnam, we are the leading company in Vietnam, and we are a state-owned company. We still have like more than 70% of our share owned by the Ministry of Finance in Vietnam. So that's the first thing. It is how to say a features of our company and in the Vietnam insurance market. But the thing is, we built that trust by a pilot model that we ran 20 years ago, and in the beginning of 2025, we organized a side field trip together with the women union in the headquarters with UNDP's delegate, and we joined a field trip and we convinced them that we have a very successful pilot model in one province in Vietnam. So why not to scale it up? And in the long side with the positions that the women union should sign the contract, to sign the agreement with Baviet, because we are a sterile company in Vietnam. We have the women union. One more thing, very important thing, in terms of how say persuading the legal authorities to listen to our ideas, listen that in order for microinsurance to be implemented successfully in Vietnam, we need some changes in the regulations that is specifically suitable for the social political organizations like Vietnamese Women Union. And we get along with them for the whole last year, and hopefully that we will have the new regulations to partially resolve the problem we are dealing with the social political organizations if they want to participate in the microinsurance. So we still have we're still at a very early stage of making the microinsurance to scale up in Vietnam, but we believe that we are on the right track, and we're still we have to thank UNDP so much, because without the UNDP support and Ms. Mai's representative in Vietnam, we cannot reach the women union at the headquarters to introduce the successful story that we want to do pilot in one province, and they cannot have no trust to scale it up. So yeah, that's our story.
Thank you so much, Ms. Tao. And again, we're hearing that partnerships are really important, not only in trust building, but also having a common understanding that you're in this for the long-term investment. Thank you so much. Um, Again, a lot of questions, but maybe one I'll pick up, and if I can address this to Akata. But also for any of the panelists, please feel free to chime in if you want to contribute. So, Akata, scaling usually breaks the human connection. As we move toward institutional models, how do we keep the communication from becoming too corporate and talking at the participants rather than talking with them? And, I hope you don't mind, I direct this to you because you've had that exposure to a multitude of stakeholders. Any insights on this?
Yeah, thank you, Diana, and thanks for that question. I think what's unique in our approach in the Pacific, and particularly when we're working with small markets, is that if you're going to do direct onboarding, if insurers are going to do direct onboarding, it's going to be very costly exercise for them. And so for us to be able to work with aggregator partners, these are what we call aggregator partners, are really referring to farmer associations, fisher associations, or women groups that are well established within the communities and who already have well-established relationships with their members, whether it be financial or non-financial. So even though we can say we are going on scale, these groups already have a trusted relationship with their members, and they're already bringing in this large member base to be onboarded to parametric insurance as support of such solutions. So whilst the onboarding happens and insurance companies are seeing large numbers coming in, the interaction is still at the community level with that trusted association, whether it be a farmer association or a women group. So we work with these groups to provide them with instruments such as grants where they can use the funding to advocate for parametric insurance, build the education and understanding around how these products work, where they can access it, and how premiums are going to be paid. So that is sort of the connection that we're working with across the Pacific, and we find this as a cost-effective approach, particularly in keeping premiums very low.
Thank you. So what I'm hearing, Akata, is that we shouldn't lose hope. Scaling will not break the human connection, right? Thank you for that. And again, really a few more questions coming in, but I know that we're a little bit pressed for time. So one question I would like to pick out, which I know that the panelists had already been given a heads up about this. who do you think should ultimately pay for climate risk insurance for vulnerable women, and what models are most realistic? I know this is a tough one, and I think all of you had sort of touched upon this in your previous bills, but what are your thoughts on this? Who should pay the premiums? And who would like to answer first? This tough question first. Dr. Sahil, I think I see you reaching for your unmute button.
Yeah, so that's a tough question. I think ultimately the burden would fall on the members, the community members. I don't think there is a single model out there in which grant funding can support beyond a certain extent. So I think the final burden would fall, at least for individual insurance programs, on the community member who's like availing the insurance. Now, if we are able to do more models at a sovereign level, either at a state level or a national level, or there are very successful models of a cluster of companies doing it in the Caribbean, in Southeast Asia. So if that is the case, then the governments can end up paying for the product. But if you're talking about individuals, then ultimately it would be the community members who are paying for the insurance.
Thank you, Dr. Sahil. I'm interested to hear from Michael's perspective as well, based on your experience working also with governments.
Yeah, I mean, what Dr. Sihu was saying is actually exactly right. I mean, there are a few risk pools. He mentioned the one in the Caribbean. It's called CRIF, and then you have CDRIF in Southeast Asia, then also PICRIC in the Pacific, right? So there is examples where this sort of, let's say, state-owned risk pools where they work. And I think, I mean, for the government, I mean, at the end of the day, it's a bit of a win-win situation because, as I was mentioning before, right? So I mean, of course, the government can say, I want to save my like the money that I would spend on the premium and put it in some fund, and then I get some interest, and then if something happens in 5 years down the road, I can take out that money and then spend it on this. But the problem is you don't know if it's just going to be 5 years, if it's 2 years, if it's 10 years. So at the end of the day, the premium that the let's say the government or some sort of administrative entity sets aside is sort of a constant burden on the fiscal budget, but it's sort of a predictable one, right? So you basically want to, let's say, eliminate this unpredictability or uncertainty in that sense. So this is something that I think has to be also really understood, that it's, as I said before, I mean, volatility cover sounds a bit very actuarial in a terminology, but it's basically really to set, like basically set aside a certain amount of fiscal budget for what you know if something really bad happens where I have to spend a lot of my fiscal budget on some sort of disaster relief. So I think on the federal level, there's good examples, and I think this has to then, of course, trickles down to the different levels. But I also agree, if it's these micro programs, if it's like the individual woman or an individual farmer somewhere, I mean, the pilot projects also for SEWA works, but then again, having really the scale for those to really be sustainable, I think this is then where you have to go the next step to basically go one level higher in a sense. And of course, also depends a bit on, again, on the perils and type of the type of risk as well, right? If it's more for flood, if it's more, for example, CDRIF operates in Laos and in the Philippines, where the cover is basically mostly flood related. So it really depends a bit also where you set your risk profile.
Thank you, Michael. And we take the point that there's no one model for, who has the burden for premium payout. It's really depends on who owns the risk and who has to manage this risk. Maybe I'll pick one last question from our list of very interesting questions. If I can direct this to Ms. Tao and also to Akata. So many of these models work in pilots. I think both of you had already also referred to this earlier. What is the single biggest barrier preventing these pilots from reaching millions of women and, being market-based and viable? Who wants to go first?
Diana, so I think I can go first because my response would sort of also respond to the question that was asked previously. And I think, when we're talking about who takes on the burden of premiums or the cost of insurance, we like to say that that if you are looking at the micro and meso level, then individuals and households should take responsibility of paying the premium cost. But the reality, especially in the Pacific, and given that majority of our households are farmers, involved in irregular income generating activities or micro and small businesses, paying an upfront premium becomes a little bit challenging for them. And really, it's a requirement for insurance companies that the premiums are paid in full upfront in the Pacific for your policy to be active. So if you're talking about paying $100 upfront to a farmer or a fisher folk, it is a challenge to them. So how can we ensure that whilst we can say it's affordable, it is made more affordable to this vulnerable segment? So for UNCDF, what we have been trying to do, and we've piloted this in Fiji, where we are working with financial institutions and these aggregator partners to, given our mandate where we can deploy blended instruments such as loans or guarantees, we have recently structured a transaction with the development bank, the Fiji Development Bank, where they are using their internal resources to pre-finance the premiums for their women clients. So when a woman comes to take up a loan, applies for a loan with the development bank, they have the option to add the premium cost of parametric insurance to that loan, and it's spread across the policy period. So it becomes more affordable to them because they are looking at, instead of an upfront $100, they are paying $5, $10 on a monthly basis. So in that way, we have immediately seen the uptake of parametric insurance within a few months increase to 700 women taking up parametric insurance because now it has become more affordable to them. But for aggregator farmers where liquidity could potentially be an issue, instead of offering a guarantee where they can cushion in terms of catastrophic events, and if women are unable to pay their loan, institutions can then tap into this guarantee facility. Where liquidity becomes an issue, we can also offer concessional loans to these associations where they can on-lend that to their clients at very concessional rates and recover. I think what is also important here is that we are then having this approach where we can transition from a heavily reliant on premium subsidies to a phase where we are making premiums more affordable to the policyholders or these women-led MSMEs or vulnerable women in general, or really our farmers and fisher folks. So that is our approach in terms of not only scaling, but transitioning away from heavily relying on premium subsidies.
Thank you, Akata. Over to you, Tao, for your thoughts on this.
Oh, from our experience, I think that in order to make a pilot program to a success in a larger scale, it depends on the three important factors. Especially in Vietnam, in my story, the first thing is a very strong strategic partnerships with a trusted organizations like the Women Union. The first thing. The second is the supportive regulations at the government level, because if we want to do it as a pilot program in one province, it's a small story, but you want to scale it up to nationwide. So we have to face with the, how to say, obstacles from the tax issues, the tax problems, or and some regulations about the enterprises, things like that. So we need very strong supportive regulations from the government to support the new model of the microinsurance. And the final thing, in Vietnam, we have the product in place, we have very modern distribution model, and also how to say, the process can be very modern. But once we want to scale up to all provinces in Vietnam, then we have to tailor-make the distribution model and also the process to specific provinces because they have different levels of internet literacy. So we have to adopt it to that, and it takes time. The strong partnership we have in place, the product we have in place, the supportive regulations from the government is something our control. We will have to, I would say, very keen on lobbying, on persuading the policy under authority to listen to us. And the final thing is the implementation. We need to tailor the distribution model and also the process by provinces once we want to make it scaling up. Thank you.
Thank you, Ms. Tao. I know that I mentioned that was the last question, but there's another I just received one sort of like burning request just for a clarification because we've been talking about, moving from piloting to scaling. I think someone wanted a bit of clarification about the point on potential dependence and the need for fully self-funded schemes. Is anyone considering scenarios with government subsidy? And could you simply give an example of schemes that are entirely sustainable in the way that you define it? Um, I'm keen to direct this question to Dr. Sahil or anyone else, Ms. Tao, Akata, Michael, anyone who wants to give an example on what does sustainability look like.
Um, so, Diana, to our knowledge, there isn't a community-based individual insurance program that is completely sustainable yet. Now, one of the things that we are trying to do is go from this standalone climate insurance model to a very holistic and integrated social protection model. And we are calling this as the Seva Climate Welfare Facility, where the climate insurance is still a critical component, but it is augmented with other services like climate and health, mental health, climate adaptation support, and even using blended finance mechanisms to provide grants to members. The reason for moving from a standalone climate insurance to a holistic social protection scheme is to make it more financially sustainable. Again, like in our experience, if there is no payout in a particular year, then demand generation does suffer. But one of the ways that you can mitigate it is by ensuring that the same set of members have access to climate and health, mental health services, telemedicine, other areas where their life is impacted so that they still feel the value of the overall initiative. And by doing so, we would not be asked the questions from our members on what is it that they will gain by giving $5 or $10 towards a premium for a particular initiative. So I think having this very holistic view will ensure that you're much more likely to be financially sustainable 5 years down the line. But at least to our knowledge, there isn't a single mechanism where a organization or a community-based set of farmer producer organization or anything which is a collective is completely financially sustainable for an insurance program. In terms of the government subsidy, again, unless the government themselves are running, designing the program, the CRIF example, the CDRIF example that Michael gave, those are the only ones in which the government subsidizes the insurance. But we are not aware of any civil society-based scheme in which the government is subsidizing the premiums, because it would be very tough for them to justify why a certain cohort of members, community members, are receiving the subsidy and not others in the community. So I think then that is a very sensitive issue, and hence we are not aware of any civil society or NGO-based programs in which the government is contributing to the subsidy.
Thank you, Dr. Sahil. And at this point, I would have to close now the Q&A. Thank you so much for everyone who added in their questions. And we will try and reach out to you for those questions that we weren't able to respond to. Thank you also for those participants who, willingly shared some information, links to, I guess, additional resources. Thank you for that. And I know that we've had a really rich discussion. I won't even attempt to, encapsulate everything, but just building on everyone's point, I think what is clear is that climate risk insurance and social protection is continues to be a work in progress, and we're here for the long-term view. And I thank again the panelists. And to formally close our session, if I can invite Athena again for her reflection and closing thoughts.
Thank you so much, Diana. And thank you so much, Dr. Sahil, Dr. Michael, Ms. Tao, and Ms. Taito. And I'll be honest, insurance is not my core area, but I really learned a lot from the discussions. Maybe just to, because we have 1 minute, maybe just to say that if I take everything that you've mentioned today, one thing is very clear that a lot of the solutions definitely can scale on their own, and there's still a lot of investment in the system that will allow it to work for women, either be it from Dr. Sahel, you're saying a public support and subsidies, or from Ms. Taito when you talk about partnerships and making sure blended finance works. I think there's a lot of work that can be done, and this is also just the starting point. And I see this the role where GCFC does come in. And I guess thank you, Diana, so much for really trying to moderate. And there was so much interest from a lot of people. So what maybe, as Diana mentioned, we'll try to look at all the different points that have been highlighted as GCFC from the different conversations and inputs from both the panelists, but also you in the chat, and then we'll see how we can try to make the connections and see how we can build off of this current conversations to move on to the next. On behalf of GCFC, UN Women, UNEP, and UNDP, thank you so much for your participation, and we really look forward to collaborating with all of you in the next steps. Over to you, back, Diana.
Thank you. Well, nothing more to say, but just to thank everyone. Thank you, Michael, Dr. Sail. Thank you, Ms. Tao, and thank you, Akata. And again, thank you to our wonderful panelists for their interest and very active participation. Wishing everyone a good day ahead.
Thank you.
Thank you.
Bye-bye.
Thank you.
Bye. Bye.
Thanks.